One of the biggest mistakes advisory firms makes is assuming that more assets automatically means more value. They don't. Because at the end of the day, assets don't pay bills, revenue does. In this clip, Mike and I will discuss why client segmentation is the foundation of growth and how spending time on the wrong relationships can quietly limit your business.
Right, correct. When I align with a group for the very first time, I look at the foundational aspect of what it is we're trying to do and create here, and that foundation needs to be solid. So you have a solid structure to build off of, and everything stems from proper client segmentation. Literally every single thing. When I work with a team for a year or years, we revert back to where we started, client segmentation. It's not a one and done. It's not a set it and forget it. It evolves over time. And it's always interesting to me because when I initially go through the process of segmentation with groups, and I've been with them for 3, 4, or 5 years, I look at how much it's changed from the very first time.
And it should change.
It should change. It absolutely should. Because we're starting to recognize what is truly ideal, who we're best suited to work with, and we start attracting more and more of the right types of people. It changes. It evolves over time about who we're aligning with. Yeah. And what I want everybody to take away from this as well is doing client segmentation is not about trying to just take a group of people because they're not just numbers on a spreadsheet. These are client relationships. And when I do segmentation, I get a lot of the same feedback. Mike, the people that have fallen into this category down here, they've been with me a long time. From when I initially got into this business, and that's meaningful to me, and I'm completely understanding of that. I just want to make sure that as your business continues to evolve and things change, where are we spending that time? And are we creating an environment for not just the advisors, but for the team to elevate experiences, do more for those that are truly deserved of the time and the attention? And that's why segmentation is not just about setting A, B, C, D and going, okay, we're done here. It's more meaningful than just the monetary aspects. Yeah. And a lot of groups segment by assets alone. I like to focus on bottom line revenue because advisors manage money differently. And I understand that there's transactional business, there's some legacy stock that's sitting there, and I've seen some high asset numbers driving low revenue. And again, it's like, well, this person has 10 million driving X, and you have some some households that have 2-3 million that are driving more revenue. Again, what are we doing for these people? It can't just be about assets alone. There's so much more that goes into that. So you might want to talk about that a little bit.
Yeah, it's interesting. There's a group I was working with here recently, and not to get into the details of it, but they have a pretty large book. They do very well, have a good revenue stream. But when we did the segmentation model, we were able to find out of their nearly 600 households, almost a third of those generated the bottom 5% of their revenue. Mm-hmm. That's eye-opening.
Yeah, right? It is.
You start putting like what's coming in on an annual basis from that client, and then you start equating that to, well, what if you were to charge your time like a lawyer, right? And you were like, what's your hourly rate? And you start looking at the work you do for those clients throughout the year. It doesn't add up. Sometimes you're at a loss.
Right.
And so the AUM, I do agree with that. I think we've got to move beyond the AUM discussion. That's how many of us were raised in this. Get as many assets as you can. Let's do that. But at the end of the day, revenue pays bills, not assets, right?
Correct.
And clients have moved past that as well. And, it's really interesting. I think Kits has had a story, or it may be their research. I'll get the exact resource. But there was a statistic I remember said that only 17% of high net worth clients feel like their advisory experience is seamless and actually personalized. Think about that. Now, when we're working with people, what we hear all the time, who are people going after? High net worth clients. Everybody's going after those folks. And what we're focusing on is the technical ability and how smart we are and the things we can do. And what they're actually asking for, based on this statistic, is what is the personalized experience I'm getting beyond your technical ability. And that hits home because one of the things I know we heavily focus on is what is that client experience. But if you're not properly segmented and you don't know where you're spending your time and resources, you can't effectively create a service model or client experience that speaks to that. So
Yeah.
you can be efficient with your time that we just talked about, right? And your resources. And so that's massive to me, that it's about more about the client experience, and the client segmentation is the first part of that.